Hello again. This is Josh Carr with The Real Angle, and today we're speaking with Ethan Orley, managing partner at Oliver Hospitality. Ethan, how you doing today?
Hey, Josh.
Hey, man.
Good to
How
see
you?
you.
Good to see you too. Not only seeing you, but for those of you who've been following the podcast, we're now doing it in high resolution, so you get to see even more of me. So I guess that's a good thing. It's not really clear, actually. Not really clear. Um, doing what I can. Nonetheless, one thing I always like to get out of the way, because if I don't, someone always emails me. The web address again for Oliver Hospitality is what it sounds like. It's oliverhospitality.com. So after we chat, if you want to check out their website, you can. So let's get into it. When did you start your hospitality business?
Actually, in your office, Josh.
Yes. Now that I know, I subleased you a desk forever ago.
No, full disclosure for your listening group. Josh was gracious enough to allow me to rent a desk in his office for a very modest sum. I appreciate that.
It was a modest sum.
Many,
It was
many,
a
many
modest.
years ago in Tribeca. Actually, I think
Yeah.
we moved twice together. We were
Yes.
in our town. Yeah.
Yeah, and we had the pleasure. Well, maybe I can't say that anymore, but the Weinstein companies used to be both upstairs and downstairs from our office, which was far more impressive before he went to jail.
Yeah,
So
there were a few famous people that I rode up the elevator with. The only person I can think of right now is David Hasselhoff.
there we go. Okay,
He's
but that's
very
famous.
tall. He's as tall as they say he is.
Uh, there we go. Most actors are short, so that's good to know. That's good to know. No, I
Um,
never got the pleasure. It was always funny. It always seemed that as soon as I got to the building, anyone famous
yeah.
stopped being in the elevator. So, apparently it's just me.
Well, you know what? The joke's on them because look how famous you are today.
I thank you.
You
I
have your
know.
own podcast.
Just like Matt Damon and Ben Affleck, but
There you
but nonetheless, nonetheless. Um, so good. So yeah, no. So you started your business. It's got to be 10 plus years ago at this point.
So it was actually 12 years.
12 years. Okay.
And so I started, just kind of brief background. I was a student at NYU in the real estate finance master's program.
Yep.
And back in 2005, met my current day business partner in class. We both went our separate ways, worked at different companies in New York. I was working buying debt, and he was developing for a group out of New York and some Queens-based projects.
Hmm.
And we both met up at kind of during the the Great Recession, and we had started off looking for apartment deals, REO opportunities, kind of in the
Yep.
class B and C apartment space. The kitchens and bathrooms model. You're familiar
Yep.
with that.
I am very
And
familiar with that.
it was really just shortly thereafter that Philip. I was living in New York at the time. He approached me and said, um, there's a small hotel that's for sale in Knoxville, and he kind of baited me a little bit. He said, "Oh, you've traveled, you like
Sure.
hotels." I was actually trying to figure out how to get into the hotel business, and he goes, "And my mom ran a bed and breakfast, and all you do is you fluff the pillows and you take their money, and you do it every day.
Sounds easy.
Pretty straight.
Sounds
It's
easy.
pretty straightforward."
Sure. Sure. Sure.
So he said, "Oh, it's easy. Let's just do it." So we did it, and a number of people thought it was not a great idea, considering it's traditionally too small to do a 28-room hotel. Knoxville wasn't kind of it wasn't the hottest thing at the time, and we had zero experience doing it. But we had grit and gusto. So we got into it 12 years ago,
Sure.
and left the apartment business. And they say once you kind of go hotel, you never go back, and it's true. It's kind of enveloping. So yeah, we've been in it ever since.
And I get that. I mean, look, the operating, the yields are better, but you got to deal with the pain and the agita of running an operating company.
That's it. So I would say a good chunk of my time is spent on operational oversight, despite the fact that we have a very large office. You're kind of in the weeds, and it's fun. I mean, it's engrossing, and that's why people love it so much.
Look, I mean, not to get too into inside baseball, so to speak, but a fond memory I have of when you did sublease space for me was, I guess you were trying to figure out what nuts to come put in the minibar, and I have this very distinct memory of you bringing in nut samples, and we sat there on a Friday and tasted like smoked cashews versus salted cashews versus whatever. And I mean, I like nuts, but that's, when you run a boutique hotel, you need to think about these things, like what kind of cashews do you put in the minibar? Where, obviously, if you're running apartments, you're like, pay the rent, like you're not discussing cashews.
Yeah,
So, but I think, and this is no knock on you, I think there's a certain level of crazy that you have to want to do that and to embrace that. And I think some people probably enjoy that level of detail, and other people would just lose their minds. So I think there's and that's fine. I think a lot of
right.
success is finding something that fits with your personality type. Um, so what kind of deals are you working on these days? What kind of stuff are you looking for in the hotel space?
So I mean, so kind of here's where we're at. So, since I left your office many moons ago, the last 12 years, we've continued to build our portfolio. So I think we've done probably around 9 hospitality deals in this period of time. And so I'm currently in Nashville. So I left New
Hmm.
York almost 10 years ago. Moved my family down to Nashville, where we started an office. We built a hotel after Knoxville. We built a hotel called the Fairlane in Nashville, four-star hotel. We built a hotel called the Hotel Claremont in
Hmm.
Atlanta. Really cool hotel, kind of landmark, kind of iconic property in Atlanta. That's well known. We did two kind of Airbnb kind of commercial level apartment to Airbnb pre-Sonder, pre-Stay Alfred, pre-Mint House conversion deals in Nashville, kind of the
Okay.
first self-check-in hotels here in Nashville. Ended up selling out of those two deals several years ago. Um, did Bought a motel in Lake Tahoe, converted that to a boutique hotel, and just opened really two hotels in the last 6 months. One in Oxford, Mississippi, which we're calling, which is now rebranded as the Oliver Hotel Oxford,
Exciting.
and also a beautiful outdoor kind of eco resort coastal retreat in West Marin, about an hour north of the Golden Gate Bridge outside of San Francisco. That's called Lodge at Marconi. So, really, we're currently running six operating hotels in 4 states.
Okay.
We have a seventh on its way. We have actually, it's a DoubleTree hotel. We bought a distressed asset from a fantastic family who we're actually partners with, but it was really just a value add opportunity in Clarksville, which is a growing city outside of Nashville. So we're doing a DoubleTree there. Great
So that'll
basic.
stay as a double tree. You're not returning
Well,
to.
it was actually Ramada back in the '80s. Then
Okay.
it became an independent, and we're branding it now. We think that's kind of the best life for it,
Hmm.
and that's the highest and best use. So really, we will be operating 7 hotels. We're up to about 20 people in the corporate leadership team here in the office, running those hotels with property level teams at each property. And so we have a nice sized management company at this point. And to answer your question, we are out looking for new deals, and I would divide those deals up into 2 categories. One, which is newer for us, is third party management.
Okay.
So we're looking for third party opportunities where we can come in and advise a property owner who wants to either convert a building to a hotel, or they're just looking for a replacement management company, and then eventually find ourselves in a management position. And our specialty is boutique, independent,
Right.
something that kind of has something that has the potential to be really interesting and has a strong food and beverage component. The other half of our business is where we're wearing the investor hat and we're out syndicating money. or raising from private equity or institutional or family office,
Sure.
and looking for opportunities to be owner and operator. And so, we're out looking for both opportunities today.
Well, and so here's a question: when you talk about building an operational business, because you're talking about the management company thing, is the logic there? Hey, we built an in-house operational team. We might well just get economies of scale. Is that what's driving that, or what's driving the
It,
desire to grow the management company?
yeah, it's really the former. The easiest way to scale up a management business is to take on third party. So, it's hard to manage for other people. I mean, it can be really rewarding, but it can
Sure.
also be hard. I mean, if you had a choice to, you got $1 billion, you do your own deals, or you go partner with somebody and have to talk about everything twice. I mean, it
Right.
is generally harder, but
Sure.
if you can get a good flow, they could be your best, referral agents, and there could be more runway. So it's really an opportunity for us to continue to build out the management company and spread our fixed costs, and ultimately it helps us and them. And so, we have we have just under 500 keys under management, which is small, but we also have a lot of small hotels, and so, we are looking to pick up at least another 500 keys over the next 3 years or
Yeah,
more.
and small is always relative. I mean, it's funny.
Yeah,
Our industry is always growth focused, right? So, on one hand, 500 keys doesn't sound like a lot, but to a guy with one hotel, it is. It's all a matter of perspective. I mean,
it's all perspective.
yeah, I mean, it's big enough.
And right, and overhead. So the more
Yeah,
overhead you take on, the more enticed you are to go out there, and you're like, oh, I'd better pick up another property.
right. And now that I'm paying for this nice office space and I have this bookkeeper, you know, she's leaving at 3 o'clock. She could work longer. Like just do more. We've already set you up with a computer and stuff. It's funny. I mean, I've done university teaching for years, and the thing I always found so funny about universities is they have these very expensive facilities, and then the weekends the facilities are unused. They you paid for the building. Do something with it for God's sakes. Find
Right.
a use. It doesn't even matter what. But right. So I guess the other thing that's interesting about talking to you is, I mean, you now have a couple of hotels which have the name Oliver on them. You've got other hotels that are in the boutique-ish family of things. Do you think long term the Oliver brand becomes its own thing? I mean, or put another way, have you seen the benefits yet where someone stays at one of the six of your boutique hotels and then they say, well, now that I checked out this one, let me stay at the other five? Are you seeing much cross selling yet?
Uh, great question. So I think when we started this, we even early on, over a decade ago, we were like, oh, we'll just keep doing Oliver hotels. But because we are kind of positioned to do opportunistic deals, in the sense that we find opportunities
Hmm.
that just present themselves. It's not like we're saying we want to do 5 Olivers. Let's go find something that's exactly this box in these
Right,
5 cities. We're saying, oh wow, here's an interesting deal that we can buy at $40 a square foot. This location needs a boutique hotel, and wow, this building looks like nothing else we have in our portfolio.
right.
Would it be fair to call it an Oliver, right? So,
Like
you
the
know,
DoubleTree one you're mentioning, which it's a
some things
DoubleTree.
just right. So,
Right.
we're really, especially for this, your audience on this show. I would imagine we're all real estate trained.
Yes.
So really, Philip and I come from a real estate training background, and so we're deal guys who happen to fall into the hotel world, and so we're kind of our deal first, and then
Right.
kind of in seconds, and that's out of respect for the brand, but also just a good deal
Sure.
is better than a bad deal that just happens to do well for the brand. That's
Yeah,
that's
you're
sort
not
of
going to leave money on the table just because it
we're
doesn't
not
fit with the vision. If you can make a
because
buck, you make a buck.
ultimately we need to, ultimately the deal needs to make sense for our investors, and our investors really the return for them comes first, and if we can present a good deal, the rest is gravy, or is a lot easier. um,
Now that said,
So
I could see a world for you down the road where it does become about, well, let's raise money to just grow the brand. But that's a very different
right,
conversation.
and so what happened this year is, so we did the Claremont. The Claremont was already kind of a famous name, so you can't, it's like the Hotel Chelsea. You would
Right.
never rebrand that as something else because it's too famous.
Hmm.
Um,
Hmm.
the Fairlane was a 4-star high-rise hotel. It didn't feel right. The Station House Inn was an old, the 1970s Best Western. It was exterior corridor. It could have been, and maybe we made a mistake, but it was really just trying to protect the brand. So, but this year we bought a property in Oxford, Mississippi, downtown, right, a half mile from the campus of Ole Miss, and it was called the Chancellor's House, and we thought it was a great opportunity to extend our Oliver brand for the first time, and so we had a little pushback internally, and I think everyone is very, very pleased that we decided to expand. So when you go to the oliverhotel.com, it actually gives you the option to choose two different cities, and
That's
I think we'll
exciting.
continue to do that. I think that was a really kind of good kind of like, all right, here's something, and actually internally we've discussed, really taking that brand deeper into kind of southeastern college towns, or just generally tertiary markets in the southeast or across the country. And we think it's a great brand, and we've been very successful thus far.
That's exciting. No, and then as you said, it's like you're picking a part of the country and try to build some critical mass there because we're a
Right.
big country. No, it's
Right.
it's funny. I was talking to a gentleman from the UK for a previous episode, and the reoccurring theme when you talk to someone from the UK is just how gosh darn small their country is versus us. So yeah, you have to pick an area. You can't just say we're just
Right.
the US. So that makes a lot of sense. Um, so not to get too into the weeds here, but on your deals, generally you've done stuff deal by deal. You're raising equity for a specific deal, right? There's no like fund that you're doing or something like that.
We have toyed with the idea of doing like a GP fund or just raising a specific hotel fund. Um, every time you try to do it, someone tells you, a good reason why you shouldn't do it. You don't have to do it.
Sure.
But
Sure.
20 million is too small. You got to go to 50. If you're going to do 50, you might as well do 100. The paperwork, and then you have to have a real focus, right? So, like, the
Right.
good news is that every 3 years, Josh, there's a recession, there's a
Sure.
distress opportunity, there's COVID, there's always some story to tell.
Hmm. Hmm.
Um,
Hmm.
I do think that at some point we will do a fund, but it hasn't happened yet.
Yeah, you'll
Uh,
grow into it organically, which honestly is the right way to do it. I mean, and if you've
yeah,
got equity partners who like what you're doing, why rock the boat? I mean, if people give you money for the deals you do, then wash, rinse, repeat, get bigger,
yeah, and
build an
it's good.
operational team.
It's like unlimited sidecar opportunities for everybody. Everybody gets to pick what they want to be in.
Sure.
And it's just easier for everybody.
Hmm.
But for the last decade, we have syndicated our deals with high net worth, kind of clubbing the deals.
Hmm.
That starts to peter out at $5 or $10 million. It gets more difficult when you're raising checks of $50 to $100,000.
Right.
Quarter million, even $1 million is an anchor. So in the last couple of years, we've started to branch out as the deals have gotten larger, and we were lucky enough to bring on Cedar Capital Partners to buy our Fairlane Hotel last year in Nashville,
Hmm.
and they retained us in a management capacity, and which has been great. And the idea there was to kind of dip our toe together in the water and see if there was an opportunity to do other deals together, and I look forward to that. And we also brought in a family office out of DC to fund the entire equity component of the mixed-use project that contains the DoubleTree out in Clarksville. But it's also a parking deck. It's 50,000 square feet of retail. So the idea is to continue to kind of promote those opportunities.
Right. And
Um,
then if they like that first one, they'll do more. I mean,
and so right now we are, the latest deal we're raising for is we're raising $15 million of equity on a $65 million project that we own. We own the building. It's the former, I call it the former Grand Hotel of Knoxville, when
okay.
Knoxville was really in its heyday in the 20s. Well, it certainly has come way, way back. One of my favorite cities in the country. and it's been a very kind city to us for our business. But we are in in that situation. We are looking for that single family office or three family offices to fund a deal of that size.
Right, because at that point you're not raising $25,000 checks, which
That's
I
right.
totally get. I mean, it's
Yeah.
and also, I mean, and maybe this is just my 2 cents, but I think sometimes with things that are value add turnaround opportunities, family offices tend to be more sophisticated, so they understand what you're talking about. Whereas a lot of times when you syndicate stuff, if it doesn't photograph well, if it's not pretty, they can't really wrap their brains around it.
Well, not only that, but listen, I mean, we're not perfect. I mean, we try to underwrite as best we can, but there
Sure,
are cost overruns, there are time overruns,
it's
and we
development.
have to go
Stuff
back
goes
and do
wrong.
a capital call or even do a second capital call on small, call it unsophisticated but high net worth individuals who are just looking for, hey, want to do a fun deal? You told me it's going to pay a 20% IRR over the
I just
course
want
of
yield. I want my
a
yield on
5 year
my
old.
return.
Like, we're going the wrong direction here, and and that does happen, and
Sure.
it's no one's fault. And so it's easier, in more sophisticated, higher risk, value add, opportunistic deals. I think to talk with a family office that you can have that call. They can be on your calls. They know exactly what's going on, and they can strike. They can strike a check easily, and be in for the long term. So,
And also, I
and you get
imagine with a family office, when you're dealing with more sophisticated entities, they also have contributions they can make. Like they understand what you're doing. So
right.
their opinion matters because they might say, "Hey, have you considered doing X, Y, Z?" And you're like, "Good point."
Yeah,
Because they have
agreed.
something to add. Well, and this gets me to one question I always like to ask, which is, what kind of hotel deals are good but not for you? Like what I mean, I understand what you're looking for. What are you not looking for? What is stuff that works for another operator that you're just like, that's not our bailiwick. That doesn't ring our bell, so to speak.
I think that ultimately, listen, as operators, we could theoretically take on anything, right? You bring in
Sure.
the right expertise.
Right.
It's really operations or operations, but we don't have internally, um, call it the institutional uh, knowledge or kind of the capacity to take on a you know 300 400 key conference hotel in Orlando, right? um, we could hire the right GM, we could write the right regional, but I don't know if I'm bringing anything to the table there myself.
Right.
um, but if the deal was large enough, we could hire in that expertise, right? I mean, any great company,
Yeah, but in theory, if the deal were good and it was that kind of product, someone else would do it instead of you. So
Right,
that's
right. So I think our box is 50 to 200 keys in a hotel.
okay.
We like urban core, but we can also kind of go out. South Lake Tahoe has been a really interesting market for us. It's quite seasonal. So so you got to understand how to kind of hold cash during the good times, because it's there are kind of peaks and valleys there. But I don't think we would be great economy operators. I think we've got just too much corporate overhead. We have a 3 person, I'm sorry, a 4 person digital marketing and social media team.
Right, which
Um,
is great for boutique stuff, but
which is great, but like,
that's not the airport hotel.
completely
Yeah.
unnecessary. And really, so we've
Yeah.
got to feed the model where we can put forward, just incredible, email marketing, graphic design, social media, and which is why food and beverage is so good to us. It's challenging, but it allows us to kind of tell the full story.
Right, you're selling an experience. I get it.
So
I get it.
experience, places that can tell a story.
Yeah, 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 yeah. Well, and that gets me a question I always like to ask, which is the secret sauce question, and I think you basically answered it, which is you're selling someone. It's more than just a room for the night. It's the experience around the room. It's the food, it's the decor, it's all that good
Yeah,
stuff. All
yeah,
that good stuff.
yeah.
Which, again, I always find this stuff amusing. This gets back to the cashew conversation.
You gotta
Um,
love it. You gotta love it,
you
Josh.
gotta love it. You gotta love it. I mean, which is fine. I mean, you probably don't remember this, but we had a whole conversation probably over a decade ago about thread counts. Do you remember this with the pillows? Do you
I think
remember
I do.
this?
Yeah, yeah, yeah.
Yeah, you brought me two pillows and asked me to rub my face against them to see if I could tell the difference thread count was. And I, of course, just being apparently just a troll, was like, I don't know, they're pillows. Like I was having trouble distinguishing the thread count quality, which is good. I mean, if you can get away with a lower thread count, good for you.
That
Um,
must disappoint your mother. Your mother was in the fashion world.
yes, my mother worked in the fashion business, and then she married a man in commercial real estate, and here I am. So, certain genes did not pass. I mean, I appreciate the arts, I appreciate design. I also can't draw to save my life. So I think appreciating the arts is different than wanting to be actively involved in them. And in the same way, I appreciate good decor. I can appreciate the fact that you're delivering a quality experience. I might be a little too much of a cynic sometimes to enjoy it, but such is life.
There,
Such is life.
yeah,
But that's fine. That's fine. Um, Interesting. So, just to talk finance for a moment, I mean,
yeah.
interest rates have been up then down. The economy has, shall we say, been challenging for hotels because of what happened over the last few years. I'm sure COVID was not a walk in the park for you because it wasn't for anybody. What's it look like these days in terms of availability of equity? I mean, we talked about equity a bit. You got guys, that's great. Availability of debt, like what are you seeing out there as a hotel operator?
Yeah. I mean, it's it's non-existent at typical commercial terms. It's very much available, at kind of from private lenders,
Got it.
whatever you call them. I mean, as you know, they're in full swing today.
Yeah,
Um,
non-bank lending is all the rage. High yield, bridge
right.
lending,
So if you want it, you
non-bank
can
lenders.
get it for a price.
Sure.
And so we had one hotel that we termed out, we matured out,
Sure.
and we kept extending, and we actually decided to take it back privately. So we actually raised an SPV for $9 million, and we
Okay.
actually offered our investors opportunity to participate in a debt offering
Oh, cool.
at 11%.
So you basically became your own lender in a
We became
sense.
our own lender. We kept them separate. I mean,
Sure.
so if one wasn't able to kind of perform, I mean, the other half would be able to foreclose. I
You'd
mean, not
foreclose on yourself essentially. Sure.
right, which nobody wants to get into.
No,
So we're
I mean, that's weird.
so,
But no, but I hear you. I mean,
right.
you did your own debt offering. Now I'm
Yeah.
going to ask a question just to be crazy here. If you're raising debt money to provide your entity a loan, which is great, have you considered building that as a secondary business and maybe becoming a debt lender for other hotel guys, or is that not something you want to put your brains into yet?
I think it's certainly a good business right now,
Yeah,
and I think it is a great business just generally.
sure.
I don't think we have the bandwidth today to take that on.
Fair enough.
We are so not only are we, doing our own management, but we also do our own owner's representation, and so we have a two-person. I mean, outside of myself and my partner Philip, we have two outstanding folks in our office who are actively, building, acting as our own kind of in-house owner's representation and procurement agents.
Right.
So, we have a kind of we have like a construction business, we got a management business, and I think, in order to pursue, lending, we'd probably have to bring in another person in.
You'd have to bring in a professional who just does that. Yeah, who's your
He just
lending
does
guy.
it,
Which there's,
nobody.
I mean, and don't get me wrong. I mean, I think
Right.
something a lot of people don't appreciate until they run an operating business is there are a lot of different ways you can make money. So it's just a question of where do you want to put your time,
That,
and some of that's about what's the most lucrative, and some of that's about your skill set, and also just tastes and preferences. What do you enjoy doing? Because I mean, when you tell me that you raised 11 million to essentially lend money to not 11 million, 9 million to lend money to an entity at 11%, some people would hear that and go, well, heck, build a lending platform, and
right.
but
And by the
that's
way,
not your background. That's
right.
not what you do.
And by the way, 11% is only because it's, where we are today. But hopefully,
Right.
when we refinance, that 11 becomes an 8 or a 9.
Right. And if the
So
commercial banks get back into
it's a
lending, then
short term deal.
sure.
Kind of call it among friendlies. Um, So, but outside of that, we are looking to raise construction debt, um, about 35 million for this project out of Knoxville. And as you
Hmm.
can imagine, it's been difficult the last 6 months.
Yep.
Um, and I think we're going to end up going back out to market this first quarter next year, thinking that I think we're going to get a little bit further along. And but we've had to be creative, right? I mean, structured finance, is the only way to do it. CPACE, tax credits, layering pref. I mean, you
Hmm.
can get crazy if the project's successful. Then you can get out and collapse the whole structure and kind of go into a traditional kind of perm. And so one thought we have had, is just go out, get construction debt at 11%, as crazy as that sounds,
Sure.
build the project, and hopefully we get into a building environment in the next 24 months where costs come down 15%.
Right.
And so you get the benefit of lower costs. And by the time you exit out of this thing in 24 months, when I say exit, I mean, get out of your construction phase and work towards stabilization, as you just happen to hit it just perfectly. And you come in for that soft landing when the feds have reduced rates. So that's just that's a gamble, and we all take those gambles. But very Josh, how many times are there where you just hit everything perfectly? I mean, you just got to take some level of
Yeah,
risk.
no, I mean, unfortunately, there's nothing
You
risk
do.
free. I mean, if you want risk free, don't leave your house. I mean,
Right.
like, and the joke is, and then if you never leave your house, you could still die of a heart attack. Like
Right.
it
Right.
doesn't, like, unfortunately, life is risk, and that's okay. I think it comes down to a matter of just what level of risk you're comfortable with, which gets to more philosophical questions about where you are in your life and what kind of
Right.
reserves do you have. I mean, all that kind of stuff.
Yeah.
It's
So
that's more philosophical.
listen. I mean, at the end of the day, good basis, good basis, good basis, and that's really kind of been our recipe as a company. Is we've always found real estate that allows us a little bit more elbow room than I think a traditional. If you had a fund and you just had to go out and buy, in good times and bad,
Hmm.
I think you're putting yourself out there a little bit more. We are a little bit more nimble. We don't have the pressure to put money out. When we find an
Right.
interesting deal, we go and raise for it, which is the other benefit of not having a fund. And so, as a result, really every deal we've done over the last decade, if you look at kind of the incoming basis on the real estate, it's always been very, very good. Another reason why we have actually we've never done a ground up deal. We've always purchased existing bricks, because you not only do you get the land, but you get the bricks, and then you also get the tax credits.
Right.
That theoretically paid for the bricks. You kind of get the building for free in a sense.
And ground up's a whole other level of risk and skill set, which is if
Right.
that's not your background or your skill set. I mean, often when I talk to people who do development, they often have a background in the trades. They ran construction management operations, and that's how they got into development, which is fine. But that's not. You can only do so many things. I'm always amused when I look at real estate syndicators who raise money from small guys, and they say, "Well, I'm going to be the get an acquisition fee and a financing fee, and I'm going to be the attorney, and I'm going to be the mortgage broker." And it's like, look, no one can do everything. You can only do so many. If you're really lucky, you can do one thing well and maybe two. But you can't do five. That's just
Right.
life. That's life. Well, look, this has been very good. It's fun to talk about the hotel thing. I've always been fascinated by hotel operations. Um, Strategically, it sounds really interesting which way you're going. I don't know. I went through my questions. Is there anything else you wanted to throw out there as far as visions for the future of hotels? Well, I will ask one question, one final question, and it's something you mentioned much earlier. You mentioned that you did a couple of hotels which were like self check-in hotels. You want to talk about that for a moment? Because I know what it is, but I also don't know if everyone else does.
So if you've ever rented an Airbnb and they give you a code to enter the
Hmm.
door and there's nobody there to greet you, that is a self check-in hotel.
Right. Right.
And so what happened in the last 10 years is that larger institutional or venture-backed groups have entered the space, and they've said, okay, it's not just your one-off apartment. It is, let's take it down an entire building, and let's put a passcode in every single door.
Right.
On a 100 room apartment building, and it becomes self-check-in.
Right.
And so that's an easy way to eliminate your front desk.
Right. You're replacing staff with technology.
Full-time employee. Your housekeeping is only once a week or whatever it happens to be. And so that's been all the rage. Now that space has transformed itself, just like the WeWorks and the Industriouses and the Serendipities have changed, gone from where they would lease the space and say, we're going to pay you a guaranteed rate plus a little bit of upside, and we'll take on all the risk. But then they had these short-term contracts. But they were signing a long-term contract with the landlord and a short-term with the tenant. The same thing happened in the called self-check-in Airbnb.
Yeah, in the hotel space, right.
So Stay Alfred actually went bankrupt for that reason, because they signed a long-term deal. And then, when things went belly up during COVID, they were out because nobody showed up, and they still had a guaranteed payment to make to the landlord. Sonder's still around, and they've grown rapidly, but I think their stock price has taken a tumble. I think they're transforming themselves into management brands.
Right.
And so that's you see that Hilton is a management brand, right? So everyone eventually figures out that they can reduce risk and increase profits by just charging a fee to a landlord.
Own nothing, just be a manager.
However the property does, you get 95% of it, and we take a piece. So really, that's what we did here. Is we took an apartment building, both actually 24 unit apartment buildings, A+ locations in Nashville. The landlord came to us and said, "Hey, here's a couple $1 million. Can you convert this to a hotel?" I said, "Great," and that was a great business at the time. It still is. That was an area where I think we like to kind of spread our wings, and we like to do creative, interesting projects. So
no, it's fun, and that's honestly that's why I was asking. I think there are just so many different ways you can slice and dice this. Which, again, coming from more the traditional apartment space, we have a limited amount of ways we can make money, whereas you guys have just more.
And that's why we like it. I every day I wake up and I go, what can we do? I mean, it's unlimited, Josh. Right. It's so much fun.
That's a lot of fun.
I would just let anybody know if you've got a hotel project you're considering and you want it to be an independent hotel. We'd love to throw our hat in the ring as a potential management partner. If you're looking to put money to work in a boutique deal as an investor or as a co-GP, we're looking for partners
you want to talk
every day.
Look, I appreciate that, and I will say to you what I say to everyone, which is, and if by some chance being on this podcast makes you $1 gazillion, buy me a decent bottle of scotch, and I will appreciate it. That's it. I'm very reasonable commission. I'm a simple man. I'm a very simple man. Nonetheless, Ethan, it has been. I'm seriously just a simple man.
That and a can of nuts.
Nuts. I've really built quite the Scotch collection over the years. It's a very civilized way of working. Well, nonetheless, thanks again for joining me. This has been excellent. And for those of you who've tuned in, OliverHospitality.com. This was Ethan Orley, and I'm Josh Carr, and I'll see all of you again next week. Thanks again, Ethan.
Thanks, Josh. Good to see you.